All right, everything looking good. We are live. If somebody doesn't mind just kind of sounding off in the chat that we're coming through loud and clear. As always, I would appreciate it. But let's go ahead and get started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market outlook. It is 8 p.m. Eastern Standard Time on 5/29/2022. And before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Okay, so obviously not much happening over the weekend as far as crypto is concerned or anything. We have another day before the markets open back up, as tomorrow is obviously Memorial Day, so we have a holiday. So we'll have no market action for the stocks. Not much has changed since our Friday wrap up. We went a little late on that stream, so we were nearly at closing time. But we are approaching the end of the month, so definitely important time to pay attention to our longer term time frame charts. So here looking at TNX on the daily, we see that we are basically just going sideways, slightly down, while the indicator oscillators are trending down pretty aggressively. We see like the stochastics are all the way at the bottom of the range again. So what we're looking for is the potential for a push back to the upside sometime in the near future, and then paying attention to what happens with that. As we see that, the stochastics are down at these bearish control zone levels, and there's only so much further that they can go. And price action has essentially gone up throughout the trend to the upside, but barely gone sideways to down. But now we have the indicator oscillator going from all the way in the bullish control zone all the way down to the bearish control zone. So we have a complete reset of the oscillators, while essentially nothing has happened on price action, telling us that there is a highly likelihood or higher than likely probability that we're going to see continued upside as opposed to continued downside. So we see what's amounting to a bullish reset taking place. And then we have our bonds next, TLT, essentially just kind of hanging out here in this range. Not much has changed here. We're starting to see momentum picking up to the upside on the daily. Obviously nothing substantial. Speaking of substantial, though, we have U.S. oil next. WTI crude has technically broken out of our channel now. This was the key area that we've been paying attention to. We obviously double tapped here. We came down to the heart line of that channel, and then we came and broke out. Looks like at this point in time, we will be retesting the recent highs up in the 120s and 130s, and probably revisiting the all-time highs before long. Obviously, oil just looks extremely bullish. There is still a possibility that this is distribution and we don't see that follow through. But at this point in time, there's nothing taking place here that makes me think this isn't a legitimate breakout, and we're not going to see continued upside trajectory. And when we switch to longer time frames, oil looks extremely bullish still. So Dow Jones next. So we saw strong closes on all of the major indexes. As expected, we obviously had a nice move off of the bottoms. I've been discussing this, amounted to essentially about a 10% bounce. I've been waiting for this to take place. We see in the Dow Jones and the S&P that essentially what we're looking for is that reversion to the mean play, a retest of our 200 exponential and simple. And as we sort of wrap up our monthly on this, we'll see that we have basically reclaimed the 21 for now, with essentially only one more trading day of activity still. So, while this close doesn't look amazing, it at least is a bullish close. We got bought up off of, support. We rejected lower prices and we maintained above the 21. So that is good. But, we have had monthly lower lows continually through this level, and it's not unrealistic to think we would find support at this level. Doesn't necessarily mean the market is just going to reverse or anything like that. So while it looks good temporarily, and it's good that we're getting a bounce and we didn't have a super bearish close on that monthly candle, this doesn't change my overall outlook of the market until we can reclaim the daily 200 exponential and simple on any of these assets. There's no reason to think that any of this looks bullish at the time. Now, obviously, this little move, the scalp we're participating in, with a couple of different positions. We talked about a bunch of those trade setups in advance. But that being said, we're basically looking to sell back into resistance. So SPY, very, very similar. Charts are very similar this time. Again, looking for that retest of like the 431 to like 444 level, somewhere up here to essentially just put in a third consecutive lower high to go with our lower lows, and essentially that reversion to the mean retest of the 200 exponential and simple. Then we see the IXIC NASDAQ composite, obviously much weaker. Again, just a series of lower highs and lower lows. We are getting a bounce off of this bottoming area as expected, obviously. Again, we expect this one to underperform. So while we're looking for a solid retest of a 200 exponential, possibly 200 simple on the Dow Jones and the S&P, I think we're much less likely to get it on the NASDAQ. Even though it has sold off massively, it's also having, weaker rebounds. So we don't want to get too excited on, trying to play the NASDAQ. Typically, when we're in a bull market, we want to long the strongest. And typically when we're in a bear market, we want to short the weakest. We don't want to short the strongest in the bull market, and we don't want to buy the weakest in a bear market, as they're least likely to perform counter trend because they're not performing well with the trend necessarily. So why would they perform well against the trend? But when we look at the IXIC on the monthly, the NASDAQ looks much worse. We are substantially below, the 8 and 21, not like we saw with the Dow Jones and the S&P. We obviously have another monthly lower low getting ready to print right here. Obviously looks much worse. So, when we're looking at these markets, I want to keep in mind what's the best index look like, what's the worst index look like, and, what is the overall look. Here with the Russell, again, on our way back up to the target retest of 236, 200 exponential and simple, getting a nice bounce off of our key support areas, Fibonacci's, and then also our previous all-time high prior to the Rona jump. Actually, it's technically not the all-time high, but it's like the local swing high. We did technically go higher in 2018. So, but finding some support around that level, pushing up to our target to the upside. Again, we expect this one to underperform because it's just a terrible index. When we see this on the monthly, we'll see it's similar to the NASDAQ. While we're technically looking like we want to print a bullish candle with a nice wick rejection of lower prices, we're doing so well below the 8 and well below the 21, and almost ensuring that in the next couple days that we're going to see the cross take place on the monthly. And we know that the majority of the time when the cross take place on the monthly, we see a retest of a 200 exponential or simple on the monthly. So here we had a small fake out where we did not see that take place in 2015, but in the big ones of 2020, 2008, and then back in 2000 as well, we saw a retest of the 200 exponential and simple. So probability is that we're going to see much more further downside. So again, while we're seeing one candle starting to look okay, the overall posture and structure of the markets is still looking horrendous at best. So XLE energy, new all-time highs, almost up to 90, which was our target to the upside. After that, next target is 100. Fully expect that continuation. XTN transportation, again, has made it back up to the 236. Overall, has not been responding particularly well on these bullish bounces. So while it is possible we get up as high as the top of the range around like that 85 level, a retest of a 200 exponential and simple, which I would assume essentially the top of the channel acts as resistance. The 200 moving averages act as resistance. We then see rejection. That's if we even get there. Maybe we get rejected tomorrow at the 236 and we see further downside. But overall, does not look particularly good. And then again, when we start to look at the posture of some of these on longer time frames, we see that the majority of the sectors in the stock market looks similar to this, where we're not actually reclaiming the 21 and various degrees of either slightly bullish candle, slightly bearish candle, nice rejection wick to the downside, but overall not that good. So what this makes me think is when I see all the sectors like this, most of them look weak, and then we see something like the Dow Jones and the S&P looking strong, it's very clear that the breadth of the market is focused on a couple of key players that have heavy weighting in these major indexes, and that's why the indexes held up okay, and we can find a handful of big players and key stocks that are holding up okay. But when we look at the broader market and all the individual stocks that make up that market, the breadth of those, the amount of those that are doing well or looking better, like these couple key indexes like the Dow Jones and S&P, is very low, and it's only the high market cap and heavy weight of these that's making the indexes still hold up. But when we look at the majority of the other stocks, they look more like this, and sectors included as well. So again, as a sector, transportation looks very bad right now. Looks like it's getting ready to break down, and go much lower. XLF is next. Again, nice little bounce, looking for that reversion to the mean play. But again, when we zoom out on the monthly and take a look at that, this one looks slightly better, more similar to like the Dow Jones and S&P. So we basically at this point in time have like a couple of classifications that we can look at. So we have like full-on bullish stocks or sectors in the market, which are in a clear uptrend, very strong. Everything looks good, even on short and long time frames. Something like, oil, obviously, and a lot of the energy sector and stocks doing well like that. Then we have like the kind of middle ground, which is the, overall still look bearish, like the S&P and the Dow Jones, especially on the longer time frames, although we're getting a temporary little bounce back to the upside. Still look very bearish though, but not as bearish. And then we have the majority of the stock market that falls in that like kind of neutral bearish level below it, which is, what we just took a look at, like the Russell and the IXIC, where they've already lost to 21, and it looks like we're getting ready to have a cross to the downside. And then finally, you have all of your just completely melted down assets that are just horrendous. Things that are down 90% from all-time highs. Call it whatever you want. Some of the cryptos, some pot stocks, a lot of tech stocks, etc. So we're kind of classifying things as those 4 levels and paying attention to, why we're looking at each of those levels and what looks attractive, in what particular market. And then that way we can look for the plays we're looking for. Because if we're in a bear market across the board, we want to stay concentrated into what's doing well, like energy, for instance. And obviously we want to stay away from the things that are doing just absolutely horrendous. But that being said, there's definitely some opportunity in bear markets for, undervalued stocks or sectors, etc., like our pot stocks, where we're going to look for opportunity more so than we're looking for like necessarily a specific bottom. We're looking at that exponential like risk reward ratio. If we can 10x our money to the upside versus, quote unquote, losing it all, it goes to zero, we lose 100% of our money. But if it goes up, we 10x our money. That's a nice risk reward ratio profile, even in a bear market, especially over a long enough time frame. So XLV next on the daily. I had a nice little bounce back off of the 200 exponential and simple. Obviously, we just saw like a full-on strength through everything pretty much throughout last week. So pretty much the better you looked overall, the better you look even now after like another week of positivity. But the worse you look overall, sure, you might have had a nice bounce. Maybe you moved up 20%, 30%, 40%, but you're probably still down like 90% for like some of the big movers that are just overall terrible. So that to me looks like a dead cat bounce. We've been expecting it. We're obviously taking advantage of it, but we do not want to overstay our welcome. So we're looking for opportunities to take profits at key resistance levels and just, selling into the rip as opposed to buying into the dips. So in this case, we did technically buy the dip, but for a scalp, not for like a positional trade. So next we have the XLV. So the monthly bounced to 21 right here. So again, XLV staying much stronger than most sectors. XLU very, very strong. We got that bounce off of support as expected. Now it looks like we're headed up to new all-time highs. Again, very, very strong. Definitely the places that you want to be. Like energy, utilities, consumer staples doing okay overall. Looks decent, not as good. Obviously had that pretty big capitulation move. No surprise there, as we did expect some weakness from retail, but on the monthly we did reclaim the 8. Came all the way down to 21. So again, is this a convincing move that the bottom's in and now we're ready to like go to all-time highs on everything? Or does this look more like we just got completely wrecked over the last couple months straight, and then coming up towards the close, a few days left in the month, options expirations, we're basically seeing people taking profits and utilizing that? Because essentially, what do we really do? I mean, everybody's really bullish over this recent like move, over this last like week of price action on all these different like, stocks and indexes. But what do we really do? Like, I mean, this was one day down, and then we had like 2 days kind of putting in a bottom. So we basically just took 5 days to go up to cancel out, 2 3/4 of a day. So if it takes us 5 days to go up and we don't even get as high as we went down in 3 days, we're clearly still in a downtrend, because it's just one big move down followed by a bunch of steps up, and then we just get one more big move down and it just erases all that work we put in. So we don't want to get bullish on these things. as it does look like we're going to see continuation to the downside over time, even though we saw some aggressive moves back up to support. Sure, that looks good, and it's definitely like what you need to see when you start to see a bottom in markets. But every time we get an aggressive bounce off of support does not mean the bottom's in. The bottom's going to get put in one time. So the same way we don't want to call the tops, we don't want to call the bottoms either. So XLRE, so this is already, I'm not sure why, I might have left that. So real estate looking like it's getting the reversion of the mean play. Obviously, playing out pretty well. Again, still very bearish on the daily. On the monthly, it looks okay. Closing above the 21 is obviously a key step for any of these markets. So if you were below the 21, you rallied up and left a big old wick behind. It's definitely a good start. But again, we're still very close to putting in a new monthly low on XLRE. So, it doesn't look as bad as a lot of the things we looked at, but it's still looking to put in a monthly low. So not bullish by any means. DXY is next. Again, we're seeing the DXY have this pullback as expected. The problem with this pullback is, and I say problem if you're trying to be like a bear on the DXY, the problem is that we've gone ridiculously high, and then we've used a bunch of energy, pretty much, all of the energy if we're looking at the stochastics. We've come all the way from, we peaked up here at 92, and now here we are all the way down at 8. So we've used the entire range to go down, but when we went down, we only went down a couple of percent. We went down essentially like 3%. So we used the entire range to go down 3%. Again, that looks to me like a bullish reset. We're coming back down, retesting key levels. The indicator oscillators are trending to the downside because they're basically maxed out. They're at extremely high levels. It's hard to continue going to the upside. So eventually we see that bearish divergence print like we saw right here, and then we expect that basically bullish reset to take place, where price action trends sideways or slightly down, while the indicator oscillators go much further down. And what they're making up for is that bearish divergence that we already saw taking place. And then eventually, typically, this will lead to continuation to the upside. And that's what looks likely to me. Tesla next on the daily. So again, nice little bounce back up here. Hard buy signal, a couple green histograms. Tesla's been staying stronger for longer, trying to avert the bear market that's essentially confirming on the daily. When we look at the monthly, though, what did we do? Well, we just rallied back up to the 21. So, all these charts are doing essentially what we discussed. We had talked about a scenario where the monthly closed down, and then the next monthly, we rally back up to retest those levels. Instead, we just did it at the end of the month. It doesn't really change much. It doesn't change the mentality or anything, in my opinion. Basically just changes the print on the candle, and it's really not that important, in my opinion. So, ARKK, I mean, it shows that the bulls are still alive and they still exist and they're still trying, but it doesn't actually change the overall posture of the markets. It just shows hey, the bulls still have a little bit of gusto left. They can show up, pump something up for a week. There's still people that believe the markets are not going to zero, obviously. So they're going to buy into that. But typically those same people are going to get stuck in those positions if we do go lower. So have to be very careful. ARKK, just looks absolutely terrible. At potential key support levels, again, pretty aggressive, buying coming in here. The chart looks absolutely horrendous. I mean, this is the monthly chart. This is probably one of the worst charts in existence. This looks a lot like basically a, crypto scam that goes bust type situation. We're kind of hanging out right now at some support that we had through 2018, 2019. But if we lose this level, we just go back down to $20 and completely wipe out all price action. So again, looks very, very bad still. Very, very bad. And you know what? Another thing that really stands out to me as well is, people always look for volume spikes for a bottom or a potential top. So here we see a pretty big spike on volume around the top right here. And here we see a pretty big spike on volume. So people are trying to call this a bottom. But the truth is, this thing has been gaining size throughout. So the amount of volume and the amount of shares being traded here, because there's so much more money in the fund, of course the volume is going to be going up. So yeah, sure, this looks like, oh yeah, this has got to be it. This is the peak volume. Well, that's what they were saying right here. This is the peak volume. Here they were saying this is the peak volume. So people are going to try to call the peak or the trough, the bottom, or the top based on volume. But the truth is, what we need to see happen, and this is obviously a monthly chart, we need to see this close, and then we need to see like 1 or 2 months of lower volume and positive price action. Otherwise, I mean, what if this just ends like this and this prints and everybody says that's the bottom, they buy in, we start to move up again, and then we just sell back off again, and then we print an even bigger volume candle after that. And then they're like, well, that's got to be the volume, the bottom, because that's the biggest volume candle. Well, we don't know because we can't identify the end of a trend until we see some kind of follow through, either 1 or 2 lower volume candles. So that's what's worth paying attention to me now. So before you start saying, look at this volume spike, it's the bottom because it's the most volume we've ever had. Well, sure, but so were the last like 3 months before that. So what makes us think that this monthly volume candle spike is going to be the end? We don't know. We honestly don't know. And if you figure the most volume is going to show up when you have buying and selling taking place at the same time. When you have a strong trend and everything's going up, there's no selling because you're in a bull market and there's only buying coming in. Of course, you're going to see low amount of volume because there's no selling, there's only buying. As opposed to when you're selling off or when you're topping or something like that, when you see that big volume spike, the reason you see that massive volume spike is because there's a bunch of people convinced that that's the bottom, and there's a bunch of people convinced that we're going lower. So there's a bunch of people selling, there's a bunch of people buying, and then all that volume of sells and buys is accumulating in that candle. And then we see at the end of the month, oh man, look at all that buying and selling taking place. Doesn't mean it's necessarily a bottom. It just means that people are not all on the same side of the trade anymore. As where when you're trending to the upside, like for instance, something like this, we see a big spike in volume here that ends up being, a short-term bottom on Nvidia, and then we see kind of like lackluster volume for a while as we're kind of going up because there's nobody really selling. It's probably just all people buying into this, which is why we're seeing, price rise and volume kind of just whatever. And then we see a big a big spike right here in volume. And again, it starts looking like a top because there's a bunch of buying and selling taking place. Doesn't mean it ends up being their macro top just because we had a massive volume spike. That was just where people started looking at key levels and people were buying and selling thinking, hey, this is probably a top. Meanwhile, other people are still buyers. So we see that massive spike in volume. We never actually took out that spike in volume, and this wasn't even the top. We put in a higher high after that. So we see divergence on volume taking place, at the same time that we're looking for that key volume spike. And that can tell us, okay, that probably is the top right here as we're getting like divergence on volume and then it starts to roll over. So that's what we're paying attention to when we see this stuff. Don't want to get too excited about a single big volume print, especially when each volume candle is trending higher. Because you just assume, okay, we put in a massive volume candle this month. Well, next month's probably going to be even bigger because that's what's happened for the last like 3 or 4 months. And then when that trend changes, when we start to see lower volume afterwards, then we can start looking at, okay, maybe that was a potential high or low. We look for some divergence, some bottoming signals, etc. So Nvidia obviously overshot our target slightly, but playing out pretty nicely. A little bit lackluster. I think the semiconductor space is getting pretty weak here. We saw some decent pops out of some of the other key players in the space, but when it's all said and done, these things are very cyclical. And it looks like, honestly, I think the cycle is, pretty over. We'll have to see what happens over the next like year or two. But, if you're a company that makes products and you have no way to ramp up production and you're already sold out of products for like 2 years in advance, it's tough to, see price rises in your, in your stock price when that's taking place. You kind of need something bullish like, oh, more supply is going to come online. We're going to have cheaper prices going into the future. Like, how is your multiple going to, expand in a time when everybody else's multiple is contracting and you've already sold like, a couple years out in product? It's very difficult, very difficult. So here we see the monthly chart, trying to reclaim the 21, unable to do so as of now. And again, we see extreme bearishness, hard sell signal coming out of the bullish control zone, all red histograms, not good. Obviously closing above that 21 is, better than closing below it, but not going to change the overall way that the trend looks by any means. Next we have Apple. Again, very powerful bounce here. So we see the daily looks pretty bullish. This is our initial retest on Apple. So Apple has stayed very, very strong for almost, arguably the longest out of anything that's not technically in a bull market now. But we did recently lose the 200 exponential and simple. So off of support, this is really just our initial retest or reversion of the mean. So everything else is having, maybe it's second or some of the weaker stocks and indexes are having like their third retest since breaking below the 200 exponential and simple. This is the first one for Apple. So, this is one of the more bullish stocks in the market. Obviously, I don't have to tell you that, but it's still in a bear market technically, and it's only really just getting like that retest right now. So don't want to get too excited and say, oh yeah, that's it, the bottom's in, when we're only just now seeing some of the stronger names start to have like an actual legitimate retracement. So again, on Apple, we see the hard sell signal. We left the bullish control zone. We see all red histograms. We are still above the 21. So again, looks much stronger than most on like the monthly, even the daily time frame, but not looking particularly amazing to me. Same thing with Google, obviously beaten down pretty badly, put in quite a bit of bullish divergence on the daily. And then when we switch out to the monthly, we start to see that there's pretty strong weakness in Google. Pretty strong weakness. I don't know if you can say that. It's pretty weak. Shit's weak. Broke down from the 21. Basically looks much more like an indecision candle than like that big wick on the bottom, that start to look like a little bullish. Hard sell, bunch of red histograms. The monthly, again, looks very bad on Google. Better than most, but doesn't get me like ambitious that all of a sudden the market's going to turn back around. We see no signs on longer time frames of anything bottoming. This like basically just looks like dead cat bounces from support. And we talked about that in advance. I said literally everything in the market is at support. Some are at the 236, some are at the 382, some are at the weekly 200s, some are at, pre-Rona dump highs, some are at, et cetera, et cetera. But everything was at support. Everything in the entire market, in every single sector of every single asset class was at a key support level. And that's why we were able to identify that temporary bottom. Now, I don't think it's going to be a macro bottom. I'm sure there's some asset out there that was the bottom. And if you bought it, it never goes back to that price again anytime soon, at least. That's definitely a possibility. Matter of fact, I would say that, it's a certainty. But that's probably going to be for one of, 100,000 different like charts we look at. It's not going to be the majority of them. The majority of them will see a temporary bounce, a push back up, a lower high, and then roll back over and go lower. But again, a lot of these trade setups are working out nicely, but we don't want to get greedy. We don't want to overstay our welcome. So Amazon bounced that 2,000 level perfectly, headed up to the 382, which is our target to upside around 2,500. We're at key levels already, and we're the majority of the way of this trade setup to the upside. I think it's like over 12% of the move has already taken place. So obviously very nice. But when we zoom out once again and we look at that monthly, we bounce all the way back to our 2018 top as Amazon did not put in a new high in 2020. And then after that bounce off that support level, we're just coming back up to retest some of the breakdown levels. And we turn off the drawing tools here, we see the 8 and 21 have already crossed the downside. So again, Amazon has looked stronger than most, but then it just went sideways for so long that now once it finally showed its weakness, it looks weaker than most. Because of all the stocks we looked at today, we've seen a bunch of, various sectors, various asset classes, etc. And of all of them, Amazon is one of the worst. It has one of the absolute worst charts that we've looked at. And you could say, how does that make sense? How is that possible? Well, it is. It's reality. So we have to pay attention to what the markets are actually telling us, not what we think. Because if you ask me right now, hey, is Amazon going to be one of the worst charts in the market, like based on posture on a monthly time frame, I would say no way. Amazon's strong. I'm sure they did great during, Rona times and all this like ordering online and everything. But then when you look at the chart, you say, wow, that's crazy. It's actually telling us a completely different story. So Amazon actually one of the weakest charts that we've seen tonight when we look at that monthly. We have lost the slope completely, all red histograms. Stochs are powerfully angled to the downside. We've already retested 2018 levels. So basically wiped out like, 3 to 4 years worth of gains. Very, very bad. Very bad. And obviously, it's a big player in the markets as well. So Microsoft getting a nice bounce off of our box down here. Kind of front ran the 382 slightly, but getting the retest of the 236. Obviously the head and shoulders, played out quite well. We didn't see the complete measure move, but well on our way. And then when we zoom out here to the monthly of Microsoft, we did maintain above the 21 as of now. So, we'll see how the next 2 days go. But that is a key level to hold. We obviously don't want to close where we're at right now. We want to see a little more rally follow through. Because if we close where we're at right now, we basically just have, a consistently like lower candle closes. So sure, we can rally up off of the low a bunch, but if we're still just putting in a lower low on a monthly, that's still very bearish. So, holding up better than most, but still not looking good. Walmart next. So we saw a pretty aggressive move on Walmart coming back, trying to fill the gap. Hard buy signal, a bunch of green histograms. And then when we look at the monthly, I mean, this thing just looks absolutely atrocious. It would have to rally all the way back to 138, which is possible just to stay above the 21. But this is a really, really nasty candle. Again, coming back to, wiping out all of back to July 2020 gains. So it just wiped out, a couple years worth of sideways consolidation just on that initial dump down. So we'll see what happens. Key area, we would expect to find some kind of support around this area. We have this bottom right here, but again, just very, very bad. Some clear bearish divergence on the weekly and monthly on Walmart, as we were discussing prior to that move. And then Target next. Again, it's been very strong recently, but when we look at it, obviously that massive gap down dump, saw a couple days of green histograms starting to try to come back up and fill that gap. But again, when we look at the macro on this thing, it just looks absolutely horrendous. Well below the 8 and 21. Again, wiping out, back to November 2020 in gains. So, this thing went absolutely parabolic and then just started to melt down. And it looks like it's going to continue melting down. Obviously, much lower low potentially on this monthly candle with only a couple days left. Seems likely that, the next target on Target, damn it. Seems like the next area that we should pay attention to on Target is 128. And then after that, we'll start looking at basically like 92 for probably something like a macro bottom. Again, another 50% to the downside. So overall, market's looking pretty rough, even after that nice little, week of rallying. And sure, it's always nice to see, a week-long rally. And it's going to be just enough for the people not in the market to say, oh man, I wish I was in the market, and FOMO in. It's going to be just enough for the people that are in the market to be like, ha, I knew it. I bought the bottom, and then eventually it just rolls back over and does the same thing. And we would expect, over, depending on how long this bear market lasts for, we would expect a series of, rallies. Every couple months, we should have a rally of 20 to, 50%. And then we can consider, and then continue to go lower. So gold, XAU, so still acting between the 200 exponential and simple. Those are the key levels to watch. We're seeing some daily attempts to like kind of move up and look bullish here. When we look at the monthly, we did maintain, looks like back above the 8. That's a good sign. We got to be real careful on this though. This is that key rejection that typically plays out very aggressively afterwards to the downside. So do not want to see another red histogram printing on this for the monthly. If we do, it's going to look really, really bad. At least the implications would be. I just want to look at the weekly real quick on gold. We did lose that 821, and it did go ahead and have the cross to downside. We did lose the slope line on the TJD, TDMACD. We have the hard sell signal, and the Stochs are angled to the downside. Looks pretty rough right now, honestly. I think there's a very high probability that we revisit the high 16s to low 17s, the way gold is looking right now. And then if we switch over to silver, we are down at $22. We bounced from our new low all the way back up to retest that resistance. Silver looks horrendous here, well below the 200 exponential and simple. The weekly has crossed the downside. We already bounced the 200 exponential and simple. Looks absolutely horrendous. Momentum to the downside. And then when we look at our monthly chart, again, the hard sell signal through this area, it was very clear what was taking place in silver. I know a lot of people are delusional and tried to make like strong cases why, silver and all this stuff going to go to the upside. But the charts don't lie. The chart looks like trash. So in my opinion, silver's trash. I'm sorry, it is what it is. When the chart flips around, I'll be singing silver's praises again, like I was when it was in the teens before, and it looks like it's going to be in the teens again. Very, very weak. Barely staying out of the bearish control zone for now. Again, aggressive candle buying up from 20 bucks to 22. So sure, it had a nice little 10% bounce. But when it's all said and done, where are we at? Well, we're at a new low. I mean, we have not been at this low of a price since July of 2020. And we have one single candle that projected us up that way. So if we just wipe out that candle, we're talking about $18 and the retest of a 200 exponential. So very, very weak. Silver looks really rough. Gold silver ratio looks like it is basically broken above the 200 exponential and simple and is ready to trend to the upside. This looks like the beginning of, a multi-year bull trend in gold to silver price. So it tells me that silver's price is probably silver's going to lose value compared to gold. So ACB had a nice little capitulation move last week. At the end of the week, had a nice sell-off down to $1.68. So the only thing I could really look at this chart, and I did buy some ACB just because, at this point in time, it's so cheap. I talked about it a little bit. I do expect it to continue going lower. I'm not trying to buy the bottom by any means, but that was a pretty aggressive sell-off from key levels. And honestly, at this level, it just looks so cheap to me. Trading at a massive discount from book value, and then obviously from the all-time high as well. So you could argue this was overpriced at 140. I wouldn't argue against that. I would say, sure, it was definitely overpriced at 140. But you have to argue also that it's underpriced at $1.68. I mean, it's just insane. And if it does, retest 140 ever in the future, maybe it's 2 years, maybe it's 5 years, maybe it's 10 years, maybe it goes to zero. But the exponential upside from an investment going from $1.68 to $149 versus the limited downside risk of it going from $1.68 to zero, that's phenomenal, risk reward ratio. If we just look at it in, from where we're at right now and say over time, however long it takes, it just eventually retests the all-time high again. We're talking about 8,791 percentage points. So, basically, not quite 10xing your money. It's basically like right around 9xing. Very, very powerful potential in the cannabis industry. We are bouncing the 1.5 Fibonacci extension for now. I think we probably make it down to the 1.618. And all that is from our most recent bounce in October 2020 to the high at about $20 in February 2021. And then we put that in place. It's going to give us our Fibonacci extension. And again, the target to the downside for the 1.618 is $1.42. I think it's likely that we hit that. But again, at these prices, I'm just basically like, I don't know what you want to call it, dollar cost averaging in at this point in time, but I'm just really starting to actually like actively build a position in some of these pot stocks in particular. Tilray doesn't look quite as bad, arguably quite as appealing. If it had taken out this low right here at 250, I'd be a little more excited on this. If it was trading at slightly, more of a discount, asset to book value, I would probably be a little bit more bullish on it in comparison. But right now, this one still looks good, still looks, underpriced, but the chart looks terrible, and it didn't break down from like a new all-time low. So that's the equivalence of why I think ACB looks, there's no support at this point in time, but it's super low. So the way I look at it is the type of move I'm looking for like a capitulation move is when you not only put in a new low, but then you have like an aggressive breakdown. And again, if we get a nice bounce, I may just take advantage of the position and take profits and just leave a portion of it open. But I'm really starting to look at these pot stocks and, potentially like a late year rally or like, third quarter rally. We'll have to see. Maybe they just continue going to zero forever and then eventually reach their goals. But again, Tilray, another one I'm interested in. I did not do any buying on this one last week. Hexo I did, however, though. We discussed this one quite a bit as well. Again, when we look at the book value and what it's trading at, it's trading at a massive discount. It's not, these companies are not profitable, but they're not bleeding money either to the point where it's like ridiculous. If I see a company and they're worth $5 billion and, they're losing $1 billion per year, I'm not really interested in that because it's going to take a hell of a lot to turn that company around. But if a company's worth, $5 billion and they're losing, $100,000 per year or something like that, and they have massive revenue, then you start looking at it and saying, okay, they're really close to actually being a profitable company or, at least break even or whatever. So how much more are the multiples going to compress before then? And, how much more value is there? Something like this at 25 cents, how much value is there compared to at, $2.50? Massive value, massive amount of value in comparison. So if it gets down to 12 cents though, is that going to make a huge difference from 25 cents? If you're not interested in being a seller at 50% off, you're looking to buy the lower it gets. That's how I look at it anyway. And, some of these are ripe for like potential M&A opportunities. So, again, they probably go to zero, but the risk reward to the upside is just ridiculous. If it goes from, again, some things don't make it back to their all-time highs, so maybe it never does. But if it does go from a quarter back to $33, again, we're talking about over, it's 13,956% gains just to retest the previous all-time high. So again, does it ever make it there? I don't know. Probably not. It's probably garbage and it goes straight to zero. But if it doesn't, there's some serious potential there. Putting in basically 14x in your money, 13x in your money. So again, not trying to convince anyone to, purchase pot stocks or anything. Definitely think it's a bad idea and they're probably all going to go to zero. But it's worth looking into because there's definitely some potential for opportunity there. Like we're not going to find, I don't think, anywhere else. And I think part of it is just having to have some kind of belief in the future. Is, THC and CBD going to be legalized in more states in the future or less states in the future? Is it going to be legalized by the federal government or not? And then when is that going to take place? Is it going to be in 6 months or is it going to be in 5 years? I think in the future, there's going to be more decriminalization and more legalization of THC and CBD in the United States statewide. And then I think into the future, there's a higher likelihood that eventually the government, the federal government, will be after that revenue and they will legalize it. Now, I don't think that's going to happen in the next 6 months or a year. I don't think it's going to happen in the next 2 years. I think it'll take 5 years for something like that to happen. But on a 5-year time horizon or time frame, if there's a possibility for us to like 13x our money or 10x our money or 8x our money, that's phenomenal. That's what we're looking for. So that's it. That's my pitch on pot stocks. I just feel like they're at the point now where they could definitely have further downside, but they're, you're crazy not paying attention to them, in my opinion. So CCJ on the daily, obviously none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. CCJ on the daily, able to reclaim the 200 exponential and simple. Still looking decent for now, showing some strength here. When we look out at the monthly, that is a pretty aggressive bounce off of the 200 simple as it was starting to like kind of lose that level. Now, I was looking for this to actually come down slightly lower and potentially retest like the 200 exponential. I don't know if it's going to come down that low. I don't know what kind of retest we're going to get. Maybe the 200 exponential trends up. It takes a few months of kind of sideways action and then we retest it. Tough to tell at this point in time. I'm still very bullish on uranium long term. But short term, I think these things, this basically looks to me like this has rolled over. The stochastics rather have crossed the downside. We left the bullish control zone. We try to push back up and put in a lower high here while we put in a higher high here on the monthly. So we don't have bearish divergence on the TJD TDMACD, but we have it on the stochastics. So paying attention to this, monthly time frame, how's it going to play out? We'll have to wait and see. Here on the weekly, though, we came back up, retested 821. So I'm looking for somewhere around like that 17 level for a potential bottom. On the weekly chart here, again, this looks very much like the beginning of a bull trend after, a decade-long downtrend. So this is obviously, we got in back here when we flipped the 200s to the upside. But now we're looking to basically, having taken some profits, we're looking to reload down here on our retest because we still haven't had even a weekly reversion to the mean retest. So, does it have to happen? No. No, it does not. But very, very often does. So URA, not looking nearly as good. Trying to retest the 200 exponential and simple. Still looking relatively weak. On the weekly, we sort of got the retest of the 200 exponential, kind of front ran it. And then if we look at the monthly real quick, on the monthly, we came back down and retested the 21. Looks okay. But again, we got to be careful because you start looking at these volume prints and you're like, oh man, look at the volumes like through the roof. So is this a top now? We don't know, obviously, for sure. But, it wouldn't be unrealistic to think, we see a little bit of downside consolidation and then this continues back to the upside. So that's what I'm paying attention. That's what I'm looking for. Paying attention, obviously, to like, not only key levels, but like volume prints and whatnot as well. UEC, again, reclaiming the 200 exponential and simple. Looks okay on the daily. Probably does see a little further rally. When we look at the monthly, the moving averages look relatively strong overall. We look like we basically got a rejection of higher prices and then a rejection of lower prices. So we'll see how this consolidation goes. No divergence again on the TDMACD, but we do see like a divergence push up here on the stochastics. So seems more likely than not that we're going to get, we basically have like 3 drives of bearish divergence on the monthly stochastic. Seems like we're going to get some kind of pushback down. I don't know if we're going to come back down to like the $2 range or, just the $3 range. But it looks like we're going to see some pressure on this. Now, who knows though, because overall energy stocks look good. So, maybe uranium just jumps back on the train and keeps rocking out. But I don't know. There's a strange kind of shift taking place in like the commodity markets right now on some of these. So, I think uranium is like an outlier in many ways. So UROY, again, trade setup's playing out okay. This is a big underperformer, so we expect it to continue underperforming. It's essentially trying to get like that reversion to the mean play right now. We don't see much info on the monthly. We know this is a key support to hold right now. If we lose that support, there's not much left holding this up. So we could see some serious downside potential. So, obviously needs to stay above like this $2.40 to $3 range. Or else it could go down to $1. I don't think that's going to happen, but you got to be real careful with this one because there's not a lot of support after it got that move up. So Altria, got a nice bounce off 200 exponential and simple, getting a hard buy signal from the neutral zone. Looks like it's probably going to new all-time highs soon, or at least to go back and try to revisit the all-time highs. On the monthly, it is bouncing pretty aggressively off 200 exponential and simple. It is getting the, blue slope line. Stochastics are still angled to the upside. Looks like it's going to come back up here and just try to test all these levels. So like 65 next, then about 72, then all-time high like 77 or something. And then I think it probably skyrockets after that. I mean, blue sky breakout. We'll have to see how it plays out, but it looks very, very strong now. Looks like the beginning of a strong trend. And then KHC, Kraft Heinz Company. So we talked about this one last stream. We basically have this ascending support that we're paying attention to, and then also our key fib level here as well. As long as we're above that support, above the fib, and above our 200, looks okay to at least bounce back to 200 exponential, potentially back up here to the 53 level. If we lose this level right here, we're looking to re-enter lower at like that $29 level. But we definitely have some potential from either of these fibs for a potential support area. I do have to be careful though on the weekly here. We're seeing a hard sell signal and it looks like it is rolling over into support. So now we just have to see, does the support hold or not? Looking at this monthly chart here, again, starting to build momentum right here. Blue slope line flipping, for the first time that we're ever seeing on here. So again, short to midterm, could see a little chop, maybe a little upside, maybe a little downside. But long term, this does look like it's getting ready to go higher. But the question is, does it go higher from 30 or does it go higher from here? And that I don't have the answer to. All right. And let's check out our sweet, sweet cryptos. So Bitcoin futures chart. So not much happened. Obviously weekend, the futures chart was closed, but we basically we closed slightly lower, gapped up. Nothing worth note. We're still trading in that range. Nothing has changed. All green histograms. The daily is floating up while we kind of go sideways. Just got to be real careful because that's basically a bearish reset. We have a new weekly low for the close on our futures market. So just consistently lower lows on the weekly. And a new low for like the whole trend going back to 2021. So looks very likely we're coming down to 200 exponential and simple for some support around 2400 to 2200 downside targets. And then again, when we flip out to the monthly here, the monthly looks absolutely horrendous right now. It basically needs to rally back to like 34K in the next 2 days to not look really, really bad. And again, very, very far below the 8 and the 21 at this point in time. Not good at all. And then we look at the Bitcoin Bitstamp chart. Again, not a lot of action over the weekend. We basically came back down, put in a new low slightly, and it was kind of a fake out. We've rallied since then. A bunch of green histograms, trending upward, building momentum. But where's the price action going? It's going slightly like down to sideways. Not good. Not what we want to see. Weekly, we've already retested 200 exponential. Seems likely we're going to go to the 22,461 level and retest the 200 simple. Again, the weekly close, the lowest of our weekly closes and lower than our 2021 lows. And then when we look at that monthly chart, again, just looks very, very bad. Look very close to closing, below the 21, substantially below the 21. A new low on the monthly for closes, and then very close to the 821 crossing to the downside. So everything just telling us there's high likelihood of further downside in cryptos. Also, crypto has been extremely correlated to the NASDAQ and stock market in general recently. And of course, this week, the stock market rallies nicely. Most things shot up 10%, 20%, some things even 40, 50%. And we see Bitcoin took all the beating, but it got none of the upside. So this whole week, it basically was just, sideways. So the correlation has finally broken for a week at least. And it broke in the way that you don't want it to, unless you're short. If you're short, it's good it broke. So monthly chart, momentum to the downside. We do have to pay attention to the actual histogram touching the slope line here though, because we do typically see a bounce from this level. So it doesn't have to happen, but we do see that very, very often. So it is worth paying attention to. Obviously not trying to like short into support or anything. Again, we want to be selling the rips, not buying the dips. So Ethereum, again, looking very weak. Came all the way down here and finally retested those lows. The daily doesn't look great, honestly. The weekly, we've already retested or almost retested 200 exponential. Hard sell signal. Looks like it wants to go lower. Obviously, does not look good. And then our monthly Ethereum closing very low. It's very close to the previous all-time high from 2018, which is not what you want to see. Not as significant on Ethereum, but definitely don't want to see us taking out like key levels of like previous trends. But again, looking very close to closing below the 21 and then probably getting the 821 cross. Then does crypto just do what we were talking about though? And next month it rallies back up and retest 821 cross, to make sure that it's going to get rejected? It probably does. It probably does. So we probably do come back up to like 2,600 on Ethereum, but if we don't, the target's like 11 or 1,200. So, it's a risky bet at this point in time, especially to try to fight the trend. Bitcoin dominance, another strong weekly close here, another just big, thick green candle outside the breakout. We're seeing that bullish divergence starting to play out. We're expecting the measure move up to 51, and then eventually the completion of what I suspect will be the one all the way back to 200 exponential and simple, around 56 on the Bitcoin dominance chart. And then for the total crypto market cap, looks almost exactly like the Bitcoin spot chart. So we already retested 200 exponential. We put in another weekly low close, probably heading down to $842 billion crypto market cap. And again, looks very, very close to seeing that downside cross. Now the benefit is that previously when these monthly have crossed the downside on Bitcoin price action and also on total market cap, when we got the actual cross take place, we were 1 month away from the bottom. So, maybe that happens again, and that could be a really good thing. Maybe this closes and we're 1 month away from a bottom. Maybe there's a little more pain. Maybe we come back down to that, 800 billion level, but that's the bottom. Maybe. I don't think it's likely, but previously we've seen that happen at the cross, and same for Bitcoin itself. So it's worth paying attention to. Obviously always looking for signs of a bottom, trends, patterns, tops, etc. But, in the end, we're looking for potential scenarios and then probabilities of those scenarios playing out. And then we're just evaluating what the actual market does. We're not trying to predict 100% is Bitcoin going to bottom next month, and then we're just going to buy in because we're sure about it, and then we just go to the moon after that. No, we're looking at, probability, risk reward, all that good stuff. So, position sizing, obviously key. Same with like the pot stocks. I'm starting to like nibble on pot stocks at these levels, potentially for like just scalps that I'll take profits on. But really I'm continuing to, or really starting to, build some positions in these pot stocks only because they're just so beat down right now. But if if they dropped another 75% tomorrow, would not affect me one bit. I would not be sweating it. I would not be like, oh my God, I can't believe I just wasted that money. I need to liquidate my position, or, I can't afford the leverage, or, oh my God, my margin's through the roof and now I'm underwater. Not like that at all. I could literally never, forget about these positions, and it would never affect me, not one bit. But that's position sizing, and proper, position sizing, risk reward management, etc. So Avax is next. Again, still looks very bad. Broke down from the 1.618, came back up to retest it. Looks absolutely horrendous. There's not really much to see here on these cryptos. I mean, when you look at this avalanche chart on Coinbase, this is where everybody in Coinbase was still even at like $63. Assuming you bought at the lows, you at least like didn't lose all your money. Now everybody that's ever bought this on Coinbase is a loser. So unless you bought this little wick down here, you're substantially underwater. So the majority of people that bought on Coinbase, let's just say like the middle of the range right here, the majority of the people that bought this on Coinbase, which is the biggest United States exchange, are down 71%. So if you can explain to me how the majority of people that purchased an asset on the biggest exchange in the United States are down 71%, and that somehow we're going to rally to the upside and things are going to be gravy without a long, slow grind through a bear market with just boring price action going sideways where everybody just capitulates and just gives up because of time or price capitulation, I would love to hear it, because I just don't see a scenario like that. Now, obviously some people got in before it was listed on Coinbase, but the majority of people in the United States trading on Coinbase, so probably didn't even have access to that. So the amount of people that are upside down on Avalanche is probably disgusting. As opposed to something like Bitcoin, where people could have access to that for decades, through multiple exchanges, and it's been around forever, and most people's cost base is at least like positive right now. That's not the case for a lot of these altcoins, and it probably never will be. I'm not saying that's a dead project by any means, but once something breaks down from key levels of like, IPO or direct listing or a SPAC price or, listing on a key exchange in a country, it's tough to recover from that. And many things don't ever recover. So Matic next. So on the daily, it broke down from some key levels. It is kind of holding on to support for now. We obviously have a target down here at about 30 cents. But if we look at the monthly on Matic, big juicy red candle, 821 looking likely to break down. It seems very likely that we're going to 29 cents. If we can close this monthly back above 70 cents though, I'd say there's still some hope, because that's like a key level to hold on to. Solana next. Again, Solana just complete meltdown. Not quite to the 786 yet. Trying to have some kind of move on the daily, but just looking pretty rough. Again, same situation with Coinbase. It was listed basically around $40. So we're basically around that price now, and we see the majority of the price action, and the majority of the time it was alive on this exchange, that it was substantially higher. So, we basically have a peak of $250. If we take somewhere around like the middle of the range at about $100, most people are down like 60% on this right now. So again, it's going to be very difficult to rally back up. And this is what we talk about all the time. When we have one big juicy candle like this, like one monthly usually, when we lose that level, when we start breaking in and eating away at it, it does not take long to completely wipe out that big monthly candle, because there's no buyers coming in then. This just happens so quick, and there's no price action. There's no like, oh, maybe we should go higher, maybe we should go lower, maybe we should go higher, maybe we should go lower. No, it's just literally people buying into it, because it's the new hot thing. So when it comes back down to it, and then people start being upside down or losing out on those profits, they're really quick to sell because they have no commitment. They have no, they're not loyal to this project by any means. So Solana on the monthly, looks really bad. And if it loses that $35 level, it's going to be in the same case, for probably much lower prices. It's going to be very difficult for these things to recover now. And it's going to take literally years, which is what a bear market's all about. Flushing out anybody that's not committed, and then eventually you carve out a bottom because everybody says, I'm not selling. There's no sellers left. I don't care if it goes lower. I don't care if it goes sideways for 5 years. I'm not selling. And then eventually you run out of sellers, and then buying pressure starts to build back up, and then people start to notice it. People start to talk about it, starts to build up momentum, And then once it starts building momentum, then all the money flows back in and we can start to potentially like reclaim some of these key levels. But without all of those steps happening, one after another, the likelihood of us ever gaining momentum back to the upside, extremely, extremely unlikely. We have to go through the entire like recovery process. So XMR, again, came back up, retested 200 exponential and simple. It looked a little stronger on the daily lately. We obviously had the, divergence signal, the buy, sell, buy, right on top of each other. Perfect call for the bottom. This right here is exactly the best scenario for this signal. When we see the buy, sell, buy in the bearish control zone, all touching each other, that's best case scenario. Second best case scenario is there'll be one space between the buys and the sells. So it would be like, a little more similar to, I think there's one back here. Yeah. It would be a little more like similar to something like this, where we see the sell, a space, the buy, a space, the sell. Those are usually very reliable as well. Now this time, obviously, it didn't work out that way, but only because that was the beginning of the bull market. As we're crossing above in the 200 exponential and simple, confirming into a bull market on the daily, we're getting a sell by sell divergence signal in the bullish control zone. So the trend is flipping to bullish, and now we're getting a bearish signal, so it's much less reliable. Because when the trend is bullish, the bull signals, the buy signals are the ones we want to take. When the trend is bearish, the sell signals are the ones we want to take. And then obviously, it broke down from then. So now again, for a scalp, we're in a bear trend. So this is a less reliable trend signal right here, the buy, sell, buy, because it's counter trend. But it's from the bearish control zone. Looks decent, and we're not trying to sell into support. We're actually buying into support for the retest of the resistance, which obviously looks like it's panning out. And then when we look at the monthly right here, again, this looks really bad. This one is one of the worst looking monthly charts as far as moving averages. The 8 and 21 are very, very close to cross into the downside. So we see obviously all red histograms, red slope line, slope of the stochastics to the downside with a hard sell signal. I mean, this thing looks like it's just ready to melt down. This was a nice dead cat bounce. It played out well, but we had a strong rejection of higher prices, and it was unable to maintain above the 821. I would be very, very careful with Monero. Very, very careful with that one. Algo, again, Algo just melting down, hitting some key support levels, holding for now, basically like a double test of the 618. But again, looks very bad. When we look at the monthly too, just completely melting down. Next downside target is a 786 at like 20 cents. Likely upside target would be a retest of like 53 cents. But we don't see any sign that we're going to retest higher prices by any means. We don't see any strength in this. The only thing we're going off of is just how technically it's acting with these fibs. But again, if you bought right here, you had to scalp, get in, get out, because immediately we just went lower. So this is full on slinky theory, just going downstairs. Every time we move down, we move up like half as much. Then we move down a bunch, then we move up half as much. Then we move down a bunch, move up half as much. Move down a bunch, we move up half as much. Move down a bunch, we move up half as much. So, the longer this continues, the lower the price will be, because we're clearly in a downtrend. And that's why it's so important to just start to see lower highs and lower lows and what those implications are into the future. XRP is next. Completely melting down, lost key support levels. There is quite a bit of price action around this range going back. So, we do have a ton of support on XRP, basically from where we're at right now, all the way down to like 17 cents, which I think was the last time I bought XRP was at 17 cents. So yeah, I mean, yeah, that was like the delisting FUD scenario, which, in hindsight, obviously was a great buying opportunity because we like 10x'd off that move. But when it's all said and done, XRP has a lot of support from 17 cents. It has a strong cult of followers behind it. So no matter how terrible the chart looks right now, this thing probably doesn't break down anytime soon below 17 cents. It probably just chops through this range and slowly melts down. But it looks terrible. Monthly chart is about to get, there's no stopping it now. The 8 and 21 are about to get the bear cross. There's no stopping it. So next month, the bear cross begins. And the last time the bear cross took place in XRP was December 2018. And from that bear cross, price action went down another 73%, and until it crossed back to the upside was 670 days. So it took 2 years and 70% from the last bear cross that took place. So the same thing have to happen again? No, but doesn't look good. Doesn't look like a buying opportunity, not to me anyway. ADA Cardano broke down from key levels. This thing is looking like it's going to have some further downside in the very near future. Again, 821 are about to cross the downside. There's no stopping it. Consistently lower lows on the monthly candles. This thing looks terrible. There's some support at like 35 cents. And then we have a little bit of support at like 18 cents. You know, the real support is at like 9 cents. Does it go that low? Probably not. I mean, I would really look at like, I mean, man, that's rough. I think like 35 cents is probably the next area to pay attention to. 23 is the 0.5 fib. So between 23 and 35 cents. I mean, that's pretty broad range, but I would just expect lower prices on XRP. It is at some support right now, though. KNC on the daily, again, just lost that trend. So below the 200 exponential and simple, we saw that clear rejection. We are so far putting in a higher low, so it's not terrible on the daily, but it is confirmed into a bear market after, you know, staying strong and just recently putting in a new all-time high. Again, this has just completely wiped out the gains, though. We did find support at a key level, like $2, and also at like that 120 off that wick. Doesn't look particularly great. I mean, the monthly looks better than most, but this just super bearish candle. I mean, this chart looks like the way it marches up and then has a big sell-off and then marches up and then has a big sell-off and then marches up and has a big sell-off and then marches up and has a big sell-off. Does it just base out here and then go higher? Maybe. I mean, this looks like the price action was like March to the upside. So, you know, typically what happened after the big sell-off candle? A couple months of just sideways price action. So that I would expect that basically. It's going to try to reclaim the 8 and 21. So, you know, maybe it gets above $2. If it does, maybe it retests 250. But, you know, if it breaks down again, it goes to 125. There's just, you know, with a big red candle like that and not a ton of conviction in this like particular crypto, I would just expect, you really just got to watch what Bitcoin does at this point in time. It's very clear none of these cryptos mean anything other than just a different way to speculate on Bitcoin, basically. So Hex USDT. So again, still at that support level. It did try to reclaim that level, which was key, but came back down. So it is holding up for now. If it breaks down again, I mean, it's just going to retest that wick. It just fill out that wick and go back to like 4 cents. And that's our next fib level down. If it holds here long enough, we probably do see a retest of like 11 cents. But this looks bad. I mean, the daily looks okay for like some temporary price action, but this thing looks rough. A close below the 382 on the monthly here, and it probably does just come right back down to 4 cents. So realistically, what happened? Did somebody fat finger it? Was there some kind of like, you know, liquidity crisis? Was it manipulation? I don't know. Probably a combination of all three of those things. But the truth is, that wick down was probably just a premonition of what's to come. So I would expect this at 4 cents, probably by the end of next month. So 30 days away from 4 cents. So you have 30 days to lose half your money. Hex. Ready, set, go. All right, so we made it through everything pretty quickly. Kept this one relatively short just because, you know, we looked at everything on Friday. The stream went long till like 2 o'clock, so the market's basically closed. Crypto did essentially nothing over the weekend, and we don't even have markets open tomorrow. So when it's all said and done, you know, the Wednesday midweek market update is probably going to give us a lot more useful information as opposed to this stream, but definitely important to see, you know, as this monthly is coming to an end, what we should be watching. So good to see you today, Honkiness. Appreciate you. Mustafa, good to see you as well. Hello to you from the Americas. Hello to you in the Netherlands, my friend. Appreciate all the kind words. Glad you guys get some use out of these videos. Menahor says, instead of buying stocks, buy a farm and grow it on your own. Yeah, sure, man. I mean, I'm all about diversification. I think you should have a combination of all those things. So, you know, real estate, stocks, cryptos, whatever. What's up, Spike? Good to see you. Howdy ho, he says. Howdy ho to you, my friend. But yeah, we're going to go ahead and wrap it up there. Obviously, this was a relatively short stream. Trying to keep them a little closer to like an hour to an hour and a half, so it's not like overbearing to watch them. May actually start doing like some static videos on the side, either cuts or just quick videos. You know, I almost take as much time trying to like cut and do like clips from the stream as I do just like making a 15-minute video. So I may do something where like, you know, 3 or 4 days a week or something like that. I just look at like one asset for 15 minutes or maybe like one sector for 15 minutes just in like a standalone static video. I don't want to like eliminate stuff from the live streams, but definitely feel like it gets to more people, especially if they can watch like quick little 15-minute clip or something like that. So looking at something like that back in the future, you know, doing similar to what we used to do in addition to the live stream. So but that being said, going to go ahead and wrap it up there. Appreciate each and every one of you showing up today. Thank you all for all the kind words and support. Appreciate all of the group members as they're the ones who make all of these live streams possible. That being said, it is 9:11 p.m. Eastern Standard Time on 5/29/2022. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. But that's it for today. Everybody pay close attention, obviously, to the next couple of days price action when the markets open back up. But most importantly is just keep an eye on the monthly chart and what the markets are telling us for, you know, those closes on these various assets. And, you know, what is the monthly chart telling us? Is the downtrend over? Are we just bouncing key support levels, but we expect further downside? You know, is this just a little pause? That's the most important thing. Has anything changed in the macro to make us suddenly bullish? Should we continue to be bearish? Should we be more bearish? You know, pay attention to the overall macro, and then from there, we can kind of identify some of these smaller things. But, you know, anytime we're doing these counter trend trades, we're looking to just get in, you know, lock in those gains and then get back out of there. So, but that's it for today. So everybody have a wonderful night. Crypto Trend Trader with our Sunday evening market look ahead. I'm going to go ahead and call it there. Everybody have a great one. Thank you all. Crypto Trend Trader, and I'm out of here.